Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about the Uber Grubhub deal, specifically around Uber taking over Grubhub. So taking a look at Grubhub, because of that news, it surged 29% today. That is from single day intraday trading. 1 year, it's down 7.61%. Past 5 years, up 48.2%. Scrolling down a bit, you can see that there's news around Uber taking over Grubhub. And I think this is a smart move on Uber's end to beef up their Uber Eats business. So beefing up their restaurant delivery service, and the fact that they're both leaders in this space. If you go to your app store, you could see that they're both in the top list. But looking at analyst ratings, if you look at the Grubhub stock, it's 20% buy, 67% hold, and 13% sell. And overall, a lot of the financials don't look too good for both companies. But I think the fact that Grubhub, let's take a look at what the bears say. So they're getting a lot of threats from competitors like Amazon and Uber, and they continue to spend to acquire diners or consumers while competition is forced to take rate for restaurants. Essentially, there's other restaurants have better margins, and they don't have exclusive deals with restaurants for takeout platforms. Taking a look at what the bulls say, so what do the optimist investors say? Grubhub is more aggressive for spending in short term, which could yield brand loyalty in long term. And they're maintaining its early mover advantage. So they actually started earlier in this industry, so that's why you see that they're leading in this space. In terms of scalability of the platform, it could lessen the firm's annual capital expenditure, which is a good thing. So the fact that there's consolidation between this, it'll make Uber's restaurant delivery business stronger. And during these times, the fact that no one is driving or riding, or no one's riding, the demand for rides are less than the fact that the Uber has this other vertical in the restaurant delivery business. It's a smart move to do. And if you look at the earnings for Grubhub, it actually beat the actual earnings per share is 0 versus expected was -4 cents. Now taking a look at Uber, take a look at Uber stock. From that news, it went up 2.4%. After hours down 2.62%. Past year down 18%. And it's actually been publicly traded for about a year now, since last year, May, mid to late May. So 1 year performance down 18%. Hasn't been doing too well since IPO, but especially during these times, it's rougher because no one's really looking for transportation from point A to point B, but instead they're looking for more delivery services to get their the food delivered or items delivered. Now, Uber is actually a pretty sizable business. Market capitalization is $55 billion. It doesn't pay any dividend, and PE ratios, it's not profitable. That's why there's no PE ratio. But as you can see in the news, Uber is taking over Grubhub. Now taking a look at the analyst ratings, 76% buy, 22% hold, 2% sell. I think this is a good long-term buy in the long run if you're willing to stomach the volatility. It's definitely a more volatile stock. So during bad times, it'll do poorly, but during good times, it'll do well. Taking a look at what the negative bears say. Uber's public perception has suffered, which is not good. Ride sharing is still a relatively new industry, but I think Uber is doing a good job in leading in this space in various markets, domestic and international, and the development of autonomous vehicles. Uber is trying to get into that space, but a lot of competitors like Google's Waymo, it's taking market share as well. Taking a look at what the bulls say, what the optimistic, positive investors say. Uber's position in the autonomous vehicle race could equalize gross net revenue. So once they get more self-driving cars in the market, then it'll cut their costs and have less drivers eating into their expenses. And Uber's aggregation of multimodal offerings will drive in-app stickiness. So one-stop shop for all transport needs. So in addition to just rides, there's also delivery for restaurant food items, and they created other verticals to transport goods from one place to another. So definitely it's helping Uber diversify their services. And pressure to pay a minimum amount per trip to its contracted drivers could help create a barrier to entry for small players. So this is definitely a cash heavy business, so a lot of investment not only in their technology but to run this business. So definitely that you can see that's why in the numbers Uber is having a hard time being profitable, but the CEO Dara is working hard to make that happen. Not in the short term, because short term they're trying to get over this hump, but in the long term I think they will be profitable and it'll be a leader in the transport space. So that's all for this video. What are your thoughts on this deal between Uber and Grubhub? Comment down below. Remember to use more referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.